Welcome to TradeTheMBI.com. This is John. This report is for the 17th of June. And we had a brief power interruption here with some freak summer thunderstorm here in Florence, but ended quickly after a little transformer explosion. But they seem to have gotten things back online. Anyway, the other day, as we had talked about before, we had that slight improvement to come back up to the 0%, and I had talked about the likelihood of trying to get back to 23 would be the most likely attempt. And the other day they pushed towards it, which had dipped all the way down to the 38.66, but high couldn't quite get back up to that level. Only got to the 33 and then started selling off quickly, and we broke to new lows. And of course, even in the break of the new lows in pre-market here, they pushed back up to the top of it, but just before they open here, it's already fading back a little bit from that. So everything looks negative. Continuation still here from an MBI standpoint, and the pivot up of orange the other day suggested that we're going to see it. Even if we had gotten a bounce to the 23, and that would not have lasted long, the best you could hope for was up to the 38% before retrace, simply because this deep of move into the DOC, usually you get a bounce up, rolls back down, and then you get a P2 pivot a little bit higher, and that one has a bit more of a chance of succeeding. But the reality is, the people have realized that the sanctions, everything else that have been taking place, I mean, this is, history repeating itself. I mean, Napoleon tried this back in, the early 1800s, banning all trade with Britain and everything, and that didn't work out. And here we have the same thing where, the collective West thought that this was going to be successful. The only problem was the products and exports of Russia and Ukraine combined have a dramatic effect on world economies, as well as, in our case, oil, and what that does to inflationary pressures. And that has ripple effects, and we're starting to see how severe those would be. That they underestimated them to this degree is surprising, considering it didn't take rocket science to figure out how bad it would get. But they clearly thought that Russia was just going to fold over and submit to whatever the West was demanding, and that would be the end of it. And that did not work out. And there were already other precursors built into the way things were going that was not looking healthy, and the markets recognize that. And all we are is taking some of the excess off. I mean, this isn't catastrophic by any standpoint. From the euro standpoint, this back and forth, every time we get down towards these very threatening areas, the Fed steps in. Bank of Japan decided to continue with their easing, and of course, that's not going well for the yen. So the euro is not far behind that, because they're going to try and do exactly the same thing while pretending to be serious about the constraints that are taking place, and that's not going to work either. So we can look for that to have more difficulties. And the capital flight is problematic, because at best you're going to be able to move into U.S. Treasuries. Even gold still lagging behind, but again, it has nowhere to go but to the upside in this particular scenario, because despite the fact that some people were thinking of deflationary pressures in the last week and stuff, you're not seeing any abatement in oil in a significant way that would justify that that's going to take place. And there's still plenty of demand, so people have been able to absorb it to some degree. How long that will extend through the summer and that, we'll see. That elasticity is yet to be determined, and that's one of those unknown factors, and it hasn't caused a complete stop or slowdown in the economy. And until that does, then you're going to get this back and forth. And you can see there's that demand going into it as it broke down even into new lows on TLT for treasuries, which means even higher yields. But the more demand you get in there, that lowers the yield slightly. But still, the trajectory is clear where that's headed, and it's only upward from a yield standpoint. And that's affecting cryptos, everything. Again, critical for Bitcoin to hold above that 20K, because that's just going to create more selling. But how many people have it now that have been buying in the last year or so that are plus on the positive side? Very few. And so that creates all sorts of other net effect selling that just exacerbates itself until it's all expired. And this is where we get those blow-off bottoms, just like we see blow-off tops. ETH, again, perfect from its standpoint, but again, very close to breaking its thousand. It's already done that a little earlier, but go back through where its day was. I think what the low was just right above it at 1050. So that's a key point for them as well. So it's like you're at these key thresholds. So it's a question of whether or not they'll be able to sustain it. 50K had a nice little long move, but obviously the selling has corrected to exit that slight gain from that move. And then there it is on the 50K. It was pretty clean. That carnage was early on in pre-market, and that left no options for people when the regular session began a little bit later. And it was just a matter of when you're going to see rallies pop in and how easy it will be to just take advantage of them to the downside. And there were plenty of them, and literally breaking down all the way to 36.40 again. The range had been above the 37 to 38.50, and now you really put into play to 3,000 or below. And that will be really interesting to see how that one plays out. So this was the run-up at the end of the day and led into a pretty active post-market. And here's what we got right before the open. We're still about 15-20 minutes before the open. And it's filled all that back in. There really weren't that many positive extremes, but that really shows that anytime there's a price improvement, there's plenty of people willing to push the button to get out and take advantage of it while they can. So that's the current state of things. And as always, though, keep updating with relevant details on the Skype chat. Trade well. We'll talk again later.